and welcome to the NC podcast. My name is Natasha Collins and I'm the host and founder of my firm of surveyors, NC Real Estate, which includes its members club where landlords and property investors can come and build commercial and mixed use property portfolios using the best asset management strategies from within the industry. I tell you that every single week, but if you want to find out more, head on over to my website, ncrealestate.co.uk. I am very excited today. I'm going to be welcoming Simon Zutshi onto the podcast. Simon is an experienced investor, successful entrepreneur, and best-selling author, and is widely recognized as one of the top wealth creation strategists in the UK. Hi, Simon. Welcome.
Natasha, how are you?
Very good, thank you. How are you? Thank you for coming.
Really good. My pleasure.
So I've got a wide range of questions for you today, and I think we're going to cover your hot topic, which is experience of working with motivated sellers, and then we'll talk a bit of business stuff as well, because I love talking about that side of things.
Yeah, happy to do that. Great.
So let's start off with your topic of excellence is working with motivated sellers and helping them sell their properties. Why does this work so well for you?
So, I teach people how to invest in property, as you know, and most people will go to an estate agent or an auction trying to look for a great deal, but they're competing with everyone else. So actually, we found over the years that if you can go direct to a seller, and they may well have their property on the market, or it may not be on the market yet, you don't have as much competition, and you can really get to know that person and find out what's important to them. And a motivated seller is someone who has a problem, or a perceived problem, and they feel if they can sell that property, they can get rid of the problem, they can move on with their life. Mm-hmm. And for those people, sometimes the speed and certainty of the sale is more important than maybe the amount of money they get. So they might be flexible on the price and all the terms of the deal. So we can find those people, help them solve their problem, and we get a good deal at the same time. So it's a real kind of win-win.
Can I ask you, what is the lead time between finding the people, putting your feelers out, and actually getting a property?
Well, it really depends. I've sometimes had a conversation where we do marketing, and we do our own marketing. We get leads from other people, and I've kind of tried to get hold of people and maybe they haven't answered. And I have had a call one day from a lady who was crying, and I thought, okay, what's this all about? I couldn't really hear what she was saying, and she said her name, and I thought, it sounds familiar. So I looked through my records, and I had actually been trying to get hold of her for a couple of months, and she just not come back to me. And she called me and explained that she was getting repossessed. Okay, when have you been to court yet? I've been to court. How many times? Twice. Oh, okay. Have you got an eviction date? Yes. Oh, tomorrow. And she just buried her head in the sand. And, you know, if I'd spoken to her a couple of months before, it would have been a lot less stressful for everyone, but she just buried her head. And so we managed to get an emergency court hearing. We stopped the repossession and we bought her property, and she was very, very happy. So, you know, that's a pretty short time scale, but I was trying to get her beforehand. It can really depend. I've met people who in a month's time, they're getting repossessed, and they're getting evicted, and that's enough time to do things and help solve the problem. Not everyone is a bad situation. Sometimes when you think about motivated sellers, is it someone who's got a bad situation? Well, not always. Sometimes I've met people who they've met a partner, they fall in love, they got two houses, they don't want two houses, they don't want to be a landlord, just want to get rich, so they can get on and spend their life together. And actually we've helped them sell that very quickly. So it can be a good thing as well. Someone inherits a property, you know, it's relatives passed away, they don't want the hassle, they just want to get rid of it nice and quickly. So there are all sorts of people we can help.
Are you finding that that's sped up since COVID? Because obviously for a while, probate was really slow last year. I mean, getting anything through probate, if you've been left with an empty house, my goodness, I don't think, you know, if that happened in March, that wasn't coming through until like September, October time. So if you found now that there's more people just like, I can't deal with this pandemic, I've got an empty house, like I'm dealing with the deaths of loved ones.
Yeah, there's definitely a lot of people who are suffering mental health issues at the moment because, you know, being trapped in, myself included, I think, you know, life is not as we know it, right? So that's really different. We have to understand that. But actually, I don't think, so maybe a little bit in probate, but I think the general economy has not seen the worst yet. And I think actually there's almost this little false sense of security because yes, business is shutting and people are losing jobs and things, but actually there's a lot of money floating around with bounce back loans and civils. That's partly why the market boomed in the last half of 2020. And actually, I think we're going to see worse happening. I think people are going to get, when furlough ends, people are not going to be able to afford their homes maybe. And I think we're going to see a lot more commercial property come to the market. I don't think people have really felt the pain just yet.
Mm-hmm. The one thing is, interestingly, that lenders quite right now seem to be trying to keep a cap on it with their valuations. I know we're going to get to valuations in a second, but I'm with you. I don't think we've seen the last of it. And as much as they can be trying to say, hey, we're not going to lend to you at this new high value,
Yeah.
the worst is coming. I agree.
Absolutely. And I think, so the market did boom and valuations are being challenged. But I think the lenders were quite optimistic when the news came out about the vaccine. We saw rates come down a little bit. So they really responded to the news, I think. Whereas when obviously it first happened, when lockdown came in March 2020, most of them shut and just didn't do anything at all. And partly they were then dealing with all these mortgage holidays, but a lot of them just didn't know what was going on. They said, we're not going to lend anything. And Crown Property, one of my other businesses, we actually picked up a lot of business at that point because we were lending still.
Mm-hmm. Yeah, I can imagine. I mean, it was all that risk, wasn't it, around material uncertainty from surveying.
Yes. Yeah.
So a question that often comes up is it exploitative to seek out motivated sellers? And what would you say to investors worried about manipulating vulnerable sellers?
Yeah, absolutely. And that's a really valid question. It's something that when I first learned about dealing motive, I kind of wondered that myself. I say, why? Is it really fair? If you're buying a property 20-25% below market value, you're gaining that equity. Surely that person's losing that equity. And I really struggled with that. And I think many people do. But there are a couple of points. First of all, if you're coming from your point of view, you maybe can't understand why on earth would someone do that? Why would they sell their house for it? Because you probably wouldn't do it. I probably wouldn't do it. However, what you need to do is really put yourself into the shoes of the person who's in that situation and understand. And for those people, yeah, if life was all great and everything's fine, you probably wouldn't do it. But actually, they've got circumstances where, getting rid of this property is going to help them move on and get on with their life. So that's the first thing. And secondly, until you've actually sat down with someone and understood their problem, and you say, look, and you're very clear, very open, say, look, I buy a house, I can do it quickly, but I'm not going to pay the full value. Or sometimes we do pay the full value, but we've got flexibility, might do an option or something on it. It's finding the right circumstance going to work for them. And if you find what they want and what's important to them, and you can give them that, well, actually, they're often very, very much more open to giving you what you want. So it is finding that true win-win. And very often, we'll speak to someone and actually we could buy the property cheap, but that's not the best thing for them. We can suggest something else they can do so they don't have to sell the property. So I talk about it in my book, and we teach it as well. It's very important to come from this truly ethical point of view. Mm-hmm. There are absolutely people out there who try and look for people. I'm sure they take advantage, try and squeeze them, get their best price. But you know what? Here's my thoughts on that. If you push someone, they might agree to do something, but they'll have seller's remorse and they'll back out once you spent money on legals and surveys and things. So actually, if it's too much of a win for you and a lose for them, there's a good chance the deal's going to fall over. Whereas if they're really happy with it, and it serves their problem, they're not going to change their mind because you found out what's important to them. So I'm sure there are some people who are unethical, but I think when you speak to someone, if you come from a place of genuinely want to help this person, you're thinking, how can I help them? You're saying it and you're feeling it. I think people pick up on that. And I think they can tell the difference between someone who's just out for themselves trying to get the best deal. And yes, look, we want to get a great deal. We're not running a charity, but we absolutely want to do it in a way that works for everyone. And I've made offers on property where I've not necessarily offered the most amount of money, mm-hmm. but they've trusted me. I said, I'm going to do the deal. I do the deal. And someone else, they're not so sure because they're a bit shady, whatever. They don't think they're going to do the deal. So you've got to understand these people, it's not about getting the most amount of money for the property. If it was, they could just leave it on the market until someone buys it. That's not the most important thing for them. So you've really got to put yourself in their shoes. And when you get Christmas cards from people you bought houses from and their Facebook friends, you've got to be doing something right.
Mm-hmm, mm-hmm. So what is the best way for you to find these people? What do you find works the best for you?
Okay, so it's rather than look for property, most investors will go and look for a property and say, oh, I like that one, I'll put a low offer in. Well, if you did that with 100 houses, you probably would stumble across a couple of motivated sellers. But that's hard work, and most will give up way before that happens. The key actually is to look for sellers, look for people who've got the circumstances where they might be motivated, and then you decide if the property they've got is right for you. And if it is, great. If it isn't, maybe you could pass it on to someone else and maybe get a fee, or actually maybe they just need a bit of advice. And without trying to sound too arrogant here, most people selling property, they might not be as financially aware as we might be, and actually you could just give them a bit of advice and guidance to help them solve the problem rather than having to sell their house.
Mm-hmm. Do you think you would buy things like, there's a lot of distressed leasehold right now? Is that
Yeah.
something you were after? I mean, it's expensive with the service charges if you're buying off.
Yeah, I have bought leasehold apartments in the past. I've got freehold houses. But you know what? My general rule of thumb is outside of London, which is a little bit different, obviously. If I advise my shops, I say, you know what, I probably wouldn't want to buy leasehold properties. I would just buy freehold where you can, because of the service charges, because you've got a freeholder who may or may not do a very good job looking after the building and the outside maintenance and stuff, and that affects your rental and your resale value as well. Whereas when you're a freeholder, you've got the responsibility, you can add value to that, and I think you just got far more control. And from my 25 years of investing experience, I started in '95. I can tell you the houses I bought have generally performed much, much better in terms of capital growth than the apartments I bought. So I'm a kind of freehold house guy where possible.
Okay. Okay. So how do you make sure that you get the revaluation with lenders when you're buying at whatever price you agree and you know that there's a difference between the purchase price and market value? How do you ensure that you get market value? Because I know that lenders are being quite tricky at the moment.
Yes, well, as you know, it's more of an art than a science, and different surveyors might have different ideas about what things are worth. So in the same way that a surveyor will look at like comparisons, I think what we teach our students is to try and put a pack together, a survey pack that you can give to the surveyor. And some surveyors are, oh no, I can't possibly look at that. And some surveyors are, oh, okay, thanks a lot. Now they're going to do their own research and due diligence, obviously, and they should do. But if you can influence them by showing them, well, here are some, and you've got to be realistic, obviously, but here are some like comparisons, and here are some rents and things. And you know what? Surveyors are smart people. They're very qualified people. They do a lot of study, etc. But sometimes they don't have the best knowledge of a local area. And actually, if say you're an HMO landlord, one of our strategies is we might find a property, a 3-bed house, we might renovate it, add value, add significant value, improve the quality of it, the spec, and increase the floor space by going to the attic or side extension, whatever. And actually, if we've got other HMOs in the area, we can demonstrate what they might rent for, especially if we're valuing on a commercial basis. Whereas the surveyor may not really understand what rents that can be achieved. And in fact, so Crowd Property, so I have a funding business, and we use surveyors to do valuations and things, obviously. And actually, we've changed some of the surveyors, because many of the borrowers, they do HMOs, and some of the surveyors don't quite understand how to value it. And they're not stupid people, it's just that's not their area of expertise, and they're a little bit cautious, they're probably protecting their PI insurance. So we like to work with people who actually understand it. And as I'm sure you would agree, it's very difficult to get a surveyor to change their mind once they put pen to paper. So
You can't. You wouldn't. As a surveyor, you can't do that. You can't change your mind. If you put it on paper, you can't.
Let me get off my high horse in just a moment, but I have had surveyors who have made mistakes. I was buying a freehold apartment, and a friend of mine was buying the one next door, exactly the same, mirror images of each other, and he valued one at 125,000, one at 115,000. That is a mistake, right? How they're mirror images. How can there be that much of a difference? Same floor, same size, and he, whether he not really looked at them properly or whatever, he made a mistake, and we went all the way to stop. We couldn't get him to change it, because absolutely, why would you change it? So that's my point, is if you can help them to maybe show them what the reality is, actually that's a good way of doing it. The other thing is this: if we buy at a discount, we might get a RICS valuer to go and give us a, before we purchase, open market value. Now, we don't tell them how much we're buying it for. We just say, what's the market value of this? And let's say a property is worth 200 on the open market, and we might buy for 160. If we said we're buying for 160, what would they value it at? 160, right?
Not necessarily.
Sorry?
I don't think necessarily. It depends on what it is on the.
I bought lots of property, and I've seen this quite a few times. You know, and I've sometimes had surveyors said, "You've got a really good purchase here." They know it's more, but for the lender, they're saying, "Yeah, 160,000." Whereas if you got a valuation, nothing to do with the mortgage, just what's this worth? It's worth 200. It's just 200. Then when we come to, and then the surveyor's going to go for the lenders, probably going to value it at 160 because that's what you're buying it for. They don't usually overvalue. And then when you actually come to refinance it, you use the first independent survey you had to say it's worth 200. You show that to the surveyor for the second mortgage company and say, well, yeah, I got a valuation, it's 200. I did buy it for 160. They can see that. And then I would show how I've added value to the property. And that's how we would get the revaluation.
So when you're buying, are you buying for continuous growth or just to get a discount on purchase? Are you quite picky with that? Is it just take out the capital once, or are we looking at kind of growth?
No, really the idea of investing is holding long term. And, you know, as you know, in the UK, we have a limited supply of accommodation, increasing population. So over time, values and rents go up. So really the idea is to hold long term and to rent that property out and make cash flow in the meantime. So there's certain rules that we go by, the golden rules of property investing, as I call them. And we want to make sure that we're buying at a good price, working with motivated sellers. We want to buy in an area of strong rental demand. We want to make positive cash flow. We don't buy anything unless it makes money every single month in terms of rental profit. Rule number 4, we like to hold for long-term growth. And rule number 5, we also have a bit of a cash buffer just in case unexpected things come up, we need to pay for those. Okay.
So that's kind of your checklist of everything that you've got to have in a property.
Yeah. Say again.
That's the checklist of everything.
It's one of the golden rules.
Okay. So can we let's move on to business. Let's talk about that. Rumor has it that you're about to sell Property Investors Network. I know that you will still be CEO. Was the intention to always scale this and then sell?
No, when I first started, I started Property Investors Network. It was the very first networking in the UK for property investors in 2003. And it's because by that point, I'd left my full-time job at Cadbury's. I pretty much replaced my income. And although I'd done all right in property, I realized that I'd made some silly mistakes. And so actually I'd started investing in my own personal development. And I learned from Tony Robbins that community and environment is really important. You're like the people around you. Unfortunately, none of the people around me invested in property. All my friends were still working. My family only ever owned their own homes. So I didn't have anyone around me to influence me or guide me. And I thought it would have been smart to have done that. So I went online in 2003 to see if there was some sort of group. And I was going to breakfast networking meetings, and they were great because I'd met a great solicitor, mortgage broker, accountant, all the people I needed from a property business. But none of those people actually owned their own property. So they had their own homes, but no investment property. They didn't really understand what I was going through. And all my friends thought I was a bit crazy. So I wanted to get a group of people around me who I could kind of learn from. And it was just self-interest. That's what that was all for in the first place. But then actually I realized I quite enjoyed networking and learning from other people. And then I started training people, and we grew the number of meetings. So I never really intended. And when I got to about 10 meetings, I thought, hey, this could be a national thing. And then we grew it to 50 meetings, which we have now around the country, obviously virtual as we record this right now. And actually, I never thought I'd sell it. I thought it was just something I'd hold on to forever. And it's just that the people who want to buy, we've known them for a very long time. We've worked with them. We've cross-promoted what we do. There's a values match there. And they are an international business. And actually the idea of scaling this internationally, and I'm staying on for 3 years or so, and that will be my main role, would be to scale it around the world. So it's a new challenge, and I think that sounds really exciting, and I'm incentivized to grow that business.
Do you invest elsewhere in the world?
I have invested elsewhere. Yeah, I've invested in America and in Africa and in Europe. And to be honest, I think that I did a lot of that kind of mid 2000s when the world was exploding, etc. However, I keep coming back to the UK because the UK is such a great place to invest. We've got this, as I said, this increasing demand. Long-term trend is up. It's very easy to invest here, and I think if someone's investing, it's always good to start where you live. There are definitely opportunities overseas, but I think it's harder to do your research. And some of the mistakes I might have made was I haven't been able to do as much due diligence as I do if I buy something here. So I'm actually looking to do some stuff in America. I think there's great opportunities over there. But you know, that'll be in a year or a couple of years, maybe spend a bit more time over there. And I'd love to do a bit more property over there. But you know, UK is such a great place to invest. That's why I predominantly do things at the moment.
I can completely get that. American market is hot though. I've got a development in New Jersey and I'm now in Charleston, so we're buying down here, and it's definitely
Right.
easier, I would say, than the UK, just because it's happened so much quicker, so much
Yeah,
quicker.
absolutely. Yeah.
So you also have Crowd Property, which you mentioned, and the Property Magic books, plus your property portfolio. How have you accelerated growth in all of these ventures?
I think a lot of it's been organic at first. I was when I started training people in 2003. One of my mentors said, "Look, get a book, Simon. It'd be the best thing for you." And I tried for years and years to try and write a book, and I didn't quite know what to do. And I tried getting presentations kind of transcribed, and that never really worked. And then actually, I got a coach. So someone I knew through the Professional Speaking Association, American lady actually called Mandy Gibbons Klein, Mindy Gibbons Klein, sorry. She helped me kind of put the structure of my book together. And I really focused, and I got it written in a very short amount of time. I'm very good when I work into deadlines. And then finally it was published in 2008, and it's been a bestseller pretty much ever since. We've sold well over 100,000 copies. So that's kind of grown, and that then has obviously brought a lot of people into the Property Investors Network in the UK, and actually we've released it in various places, done quite well in Australia as well. I don't really have much of a presence in America yet, but America's a very busy market, but you know, looking to get into America and do more there, especially as we grow and expand PIN.
And so how have you built that with Crowd Property? When did you start Crowd Property? Why did you decide to do that?
The Crown Property started in 2014, and again, it's kind of as an entrepreneur, you spot a market need, right? And I was doing, so I still actively invest in property. I was doing larger development deals, and from about 2012, and that's because I had great opportunities coming to me in my network. I like to make money from property, obviously. And I thought, you know, I should still be doing things if I'm teaching people to keep current. You know, I could have stopped years ago, but I was still actively investing. My passion actually is training and teaching, doing this kind of thing far more than property. For me, property has been a vehicle to help me become financially independent. I've helped many thousands of people do that as well. But it's the vehicle to do what you want to do. But anyway, so I do still invest. And by doing bigger projects, I realized just how hard it can be to actually fund those projects. And traditional lenders, they don't really understand development. And if you've got something that's a bit more creative, they might actually lend you less money and want to charge you more interest. Whereas a Crowd Property, we only fund deals in the UK at the moment. We are actually just launching on Australia. And you know, we will be spreading around the world with that eventually as well. But actually, that really has been built to scale and grow, and I've got a team running that. I have very little to do with the day-to-day now. I'm on the board still. I'm the major shareholder, but actually, it kind of runs itself. And I spotted that many of my clients were finding really good deals that they were struggling to fund conventionally. And then also, I was working with a lot of private investors who are lending me chunks of £50,000 and multiples of that, getting a great return on their money. And they were high net worth individuals. And I realized on my database from my Property Investors Network, there were lots of people who had money in the bank that didn't necessarily have £50,000, but they'd love to get a better return. So I kind of thought, well, I can put these things together. And I was actually at a business event. In fact, the company that's buying me is Genius Group, Roger Hamilton, they're kind of buying a number of businesses and doing an IPO. And I was actually at one of their events back in 2013. And I was a guest expert panel talking about how I'd grown my network and that kind of thing. And one of the other panelists was a guy called Simon Dixon, who'd set up a business called Bank to the Future. And it was in the day of crowdfunding and raising money for businesses. And I suddenly thought, wow, I wonder if that could be done for property. So I was kind of a bit ahead of my time, really. And it was very new. And the UK's really kind of been a pioneer of this, really, much more than other parts of the world. And it's still very, very new, actually, relatively speaking. But I thought, wouldn't it be great if we could put a platform together that takes care of all the legal work, takes care of all the regulation and all that kind of stuff, and looks after the security, and can introduce normal retail investors to great property deals. So we attract great deals, and there's a lot we don't do. We don't do any bad deals. And actually, we think we're as good and as quick as many lenders, in fact, much quicker than normal lenders, as fast as a bridging company, but we actually get property a little bit more than bridging companies, if that makes sense.
How many deals are you doing a year?
Well, I can tell you the general stats. We've funded since 2014. It's been a bit of an exponential growth. Obviously, it took a long time to get going. We funded 112 million pounds worth of loans. It's something like, I think, 1,200 properties that have been created through that. We only do ones in the UK. And I think it's something like 230, 240 loans over that time. It's going up every day. And whereas at first it took literally months for the first deal to fund, now we put something on the platform. We've got a very hungry database of lenders, and things are literally funded within a couple of minutes.
Fabulous, fabulous.
So it's very, very quick.
And it's good for your the people that you're financing to know that as well. So are you picky about the deals that you take on?
We're very fussy about the deals we do. Yeah, they've got to meet certain criteria. We lend a certain loan to, because obviously we have this. We're a platform, so we got to provide great finance for the borrowers. But we've also got to make sure we protect the lenders. So we work on behalf of both to kind of put the two together. And yeah, it's a great business. And I think because we don't do anything outside of property, we just specialize in that. A mistake many other platforms have made, they start lending lots of different asset classes, which they don't really understand, and we're FCA compliant. So everything's done by the book. And you know, it's a very substantial business, and it's growing to be a much bigger. And you know what? Talking about scaling, I've got a great team in there who do a great job, and I really don't get involved in the day-to-day. So whereas I'm still very much involved in the day-to-day of my training business, because that's my real passion. But this business was created from spotting the need of what some clients need. I'm just an entrepreneur solving several problems at the same time.
Mm-hmm. Is social media your main strategy for finding new clients, or what would you say works best for you?
We definitely use social media. I'm trying to use LinkedIn more than I have. That's a great resource. We do use Facebook. I'm just starting out on Clubhouse at the moment, which is an interesting platform, a very interesting platform, and we have to see how that develops. I think that's something to watch out for. It's very easy a lot of property investors, I think, waste a lot of time on social media. So I think it's important to be very targeted on what you actually do. But yeah, it's a great way to meet potential investors, great way to find potential deals. Property is a relationship business. Mm-hmm. And social media is about telling people what's going on. So it's a starting point, but you need to really develop the relationships with potential investors or people after that. So you can't just expect to meet someone they're going to fund your deal. You've got to build that relationship. So social media is definitely one way that we find clients. Through the events we do, our networking events, a lot of people come to see the humongous value they can get from coming, connecting with other like-minded people. My book, Property Magic, also generates a lot of leads for us. And because we've been doing it such a long time, our clients get better results. We are not the biggest training company in the UK, but we have more successful clients than any other training company every single year consistently, because actually we really care about our clients. We give them great tools, great knowledge, we hold them to account, we support them, they get great results, and obviously they tell lots of people. So, I think and that wasn't the case in the early days, but now we have so many people that there's proven track record that people are kind of attracted to that. And guess what? There are lots of people out there teaching people how to invest in real estate. And there are some people who are cheaper, some people who are more expensive, but no one in the UK have got the track record that we have. And that's what we want to grow around the world.
Mm-hmm. So being on social media obviously comes with challenges. There's people who say good things. There's people who say bad things.
Yeah.
What do you say to that? How do you deal with that?
Well, so there's a couple of things really. When you become more successful, you always get some people who are unfortunately nervous, jealous rather, and envious. And I think, unfortunately, social media is one of those things. Someone can sit at home for the comfort behind their own screen, and they'd say something on social media that they'd never ever say to you face to face. And I think it's some people sometimes like to have a pop at people who are successful. I was right for you, etc., because it kind of makes them feel better, and actually gives them excuse for them not maybe living their dreams and being what they want to be. So actually, I think that I used to be very, very conscious what other people would say, and I'd get quite worked up if people said something negative. But I think generally we have really, really good customers. I don't think there are many. I think many customers. I don't think there are any customers really who've done our training and not been happy and gone out on social media and told everyone about it. And if you look, pretty much every other company's got that, because the way we teach and the proof that there is about the social proof about the results that people are achieving, no one can really say, oh, Simon's training doesn't work. Well, it absolutely does work, because what about all these other people it worked for? So we haven't had customers going and criticizing us, which is great. What does happen sometimes is that sometimes you get people who are anti-property training. They say, well, why do you need to go on a property course and spend all this money, etc.? I didn't do it, and there were definitely, like we were talking about earlier, there are some people who look for motivator sellers and they're trying to rip people off, etc. There are some people who run training courses who might not really care about the clients and they're just doing it for the money. And actually, they do get a bad reputation for the business. So there are some people who are kind of anti-property training, and they kind of broad brush everyone with the same brush, if that makes sense.
Mm-hmm.
There's a great saying that I learned, I think it was Tony Robbins. He says that what other people think of me is none of my business,
mm-hmm.
which is very easy to think about, but actually sometimes not so easy to do, right?
Yeah.
And my wife's always saying the same thing to me as well, so but I think so I used to really worry about that kind of thing, but I don't. And actually, one of the things we teach our students is that they should get out on social media and they should tell people what they do. So, if you've just bought a property or you're doing a refurb or something, have some before and after pictures and that kind of thing. And it's not bragging, it's not showing off, it's just documenting what you do. And that's what social media is about, telling people what's going on in your life. And we say, look, you might get some friends who are a little bit, oh, what are you doing that for? And that's why you have an unfriend button, because really you don't want those people around you. But actually, it's a great way of attracting people to you who might want to join a venture with you. They might want to be an investor with you. They might have a deal. So we actively teach our students to put it out there. And by the way, tell people that you're getting some training and education, because if someone's going to want to work with you, they want to make sure you know what you're doing. Does that make sense?
Mm-hmm. Yeah, definitely. So do you still, and I know we've covered this a little bit, but do you still enjoy running your business today as much as when you started? How have you found your days changing over the years? What does it
so
like?
So when you start a business, obviously it's you and myself and I, and that's it. You do everything, and that's tough. And there are some things that you'll be naturally good at, some things that you're not so good at, things you like to do, some you don't like to do. And when you start, it's hard. And my tip I'd give to anyone who's a property investor or indeed a business owner is getting other people to help you is a big leap of faith, paying someone else. But actually, there's one of my mentors, a guy called Brad Sugars, who is an Australian but lives in America now. He set up something called Action Coach, which is a worldwide business coaching franchise. And he'd say that not employing someone is costing you a fortune. You see, very often people look at the cost of doing something and they don't see the value. And if you can get other people to come in now, in today's day and age, you can get virtual assistants to do lots of stuff for you at a fraction of the cost of someone employing something in your own country. But actually, if you can get rid of the things that you're not very good at, that need doing, that you might not do because you don't like doing them, or actually it's not the high value task, it frees up your time to focus on the high value tasks and then bring in the money so you can more than pay for them. So there's a little bit of a leap of faith there sometimes, first taking someone on, but it can be very much part-time, it can be virtual assistant, etc. Doesn't need to cost a lot of money, but it's the step that I think all solopreneurs have to make if they really want to get to the next level. And all property investors start as solopreneurs. They're doing it on their own, typically. But if they really want to scale and grow, you've got to bring other people in.
So what does it look for you now? What does your day look like?
Well, at the moment, I get up and I do an hour and a half on Clubhouse, which I'm hosting a room, just to kind of just establish a bit of presence, really, and just give back some value. Not selling anything, just helping people. I've meditated before that, by the way. I have a shake in the morning. Then I might be doing some prep. I love training. So I might be putting content together. Might be checking on, have some meetings with the team, see what's going on. So I'm pretty much involved in the business on a day-to-day. I've just come back from a walk with my wife. We always try and get some exercise, especially in lockdown. We try and get out of the house and do something. And so that's kind of life at the moment. It's going to be like that for a little while, because when you sell a business, actually there's more work to do, because I need to make sure, I mean, we're pretty well systemized, but we can always do things better. And there are certain areas that are going really well, and you can always, so I need to focus on the areas that are not performing so well, and bring team in and grow the business. So it's going to be a new phase for me, and eventually replace myself.
Yeah.
And then I need to work out what I want to. I need to work out what I want to do. I think I'll always be doing some sort of teaching or training or mentoring, because I just love doing that. I love seeing people get results, and they've done the hard work. But if I can be a bit of a catalyst, that's always attractive to me. That's the first thing. I like marketing and business, that kind of thing. So thinking about that's good. I think, managing my portfolio, and I actually have people to manage it for me, but one of the things I'll do with some of the revenue I make, I will probably do some more investing, probably in the States, a bit more here as well. I've probably got enough here at the moment. And so it's a new chapter of life, and I don't know how that's going to unfold yet, but it's exciting times.
I can imagine. So has lockdown been okay for you? Like, how have you found it in general?
I've found it hard. I'm a very social person. Imagine this, I've got an events company. We were running almost 600 events a year, in terms of 50 network meetings a month, then all the training, all my mastermind programs, the other courses, etc. And I didn't go to all of them, obviously, of people doing that, but I'd go to a good number of them. And I love travel as well, do a lot of international travel. I've a couple of mastermind groups I physically attend in, or used to physically attend in America. And when something that's all cut out, life changes, right? One of my favorite sports is skiing. I go at least 3 times a year, not been able to do that. My wife and I, we love to eat, and we go out for nice meals, can't do that. So it's been a real restriction. And I think that's what's affected so many people. I think life will never quite be the same as it was. I think hopefully we don't take things for granted, and I think we recognize that. And it's interesting, a lot of people being put on furlough, or maybe having their business kind of end because of what happened, I think has made a lot of people realize actually having just one stream of income, even if you're very well paid, you love what you do, is a very risky thing to do. And you need to have multiple streams. Even if you love what you do, you never know if that job or business might not exist. So having a multiple streams of income is really important. That's one of the lessons I think we've got from 2020 and the pandemic.
And trying to change things, things go wrong. How does that look? What does that look like, rather than staying the same?
Do a certain amount of planning and hypothesizing, but sometimes things happen. So we pivoted and put everything online. And guess what? It's interesting, because we make more profits. Our sales have been a little bit down, because sometimes people are a bit cautious about spending money, but we've charged less. We can pass on the savings to our clients. We don't have hotels and things, so we actually make a bit more money. We do everything from the comfort of home. So I'm going to be doing a network meeting later on that's in Nottingham, and actually I'm going to be doing it from my home here in Birmingham. So there's been some real benefits. And actually, we've had people from all over the world attend our network meetings and our training who want to invest in the UK, because the UK is such a good place to invest, that we never would have trained from. We have had people literally fly from as far as Australia to come and do a 3-day course with me and then go back in a week. Crazy trip, but we've had people do that, but not many. But we get a lot more international clients. So as we scale and grow around the country, part of my job is going to be looking for really good people on the ground in different areas who want to help us grow that business and become part of it. So it's going to be exciting, and it's going to be different, but it's going to be good fun.
Yeah. Yeah. Simon, it has been an absolute pleasure. Thank you for coming on the podcast today. I appreciate it. Everybody, I'm putting links, if you don't know where to find Simon, although I'm sure you do, but I will put the links in the show notes of this podcast as well. It's been a great conversation. I really, really appreciate it. For all of you who are listening, if you have liked this podcast, don't forget to rate and review and tag us in it on social media. Tell us what your key takeaways are. Thank you again, Simon. I've really
pleasure. Thanks for asking me, and good luck with the podcast. Thanks so much.
Thank you. Thank you, everybody, for listening today. I cannot wait to catch up with you again soon.